As ADA's futures open interest hit $1 billion the last time, its price plummeted, prompting traders to wonder whether this would happen again. Cardano's ADA coin gained 816% in 2021, propelling the smart contract platform's market valuation to $61 billion. To get a sense of how much this third-generation protocol has progressed, consider that the utter king, Ether, was valued at the same level only 6 months earlier. If the price of AD changes, so do the options markets, and the approximately $1 billion of open futures interest represents both an advantage and a risk to the price. Cautionary buyers would still wonder whether the $200 billion of future liquidations are on the horizon, drawing parallels to the April 17 plunge of 23%. Decentralized finance has undoubtedly fueled the rise of smart contract-focused cryptocurrencies, with Ethereum's median fees soaring past $35, prompting investors to look for alternatives. Cardano uses a proof-of-stake system, but its Goguen upgrade, which would add support for smart contracts and native token issuance, is still in the works. The stock of ADA, which is currently $32 billion, would be set at $45 billion. The open interest on futures contracts reached $940 billion on May 13 after ADA hit an all-time peak of $1.97. This open interest figure is remarkable given that ADA's futures volumes seldom exceed $4 billion. The $195 million liquidation of long contracts on April 17 contributed to the 23% drop that happened over 4 hours. A large open interest, on the other hand, cannot be identified as the primary cause for cascading liquidations. When it comes to unpleasant shocks, leverage is to blame. The amount of available futures contracts is measured by open demand, but buyers and sellers are paired at all times. As a result, the most violent liquidations arise while longs use undue control, and the funding rate is the best method to quantify this. Inverse swaps are also classified as perpetual contracts, and these contracts have a financing rate that changes every 8 hours. When they use more leverage, this charge rises, and their balances are gradually depleted. A premium of up to 5.5% per week may be charged during a supermarket shopping frenzy. A support average of 0.30% per 8 hours equals 6.5% monthly, which is a significant challenge on those with lengthy shifts. This large funding levels are unprecedented, and stop actions would be issued quickly. That's just what occurred on April 17, as Bitcoin's price plummeted to $52,000, dragging the whole cryptocurrency sector down with it. For most markets, though, the existing financing cost is near to zero, showing a balanced usage of leverage on the buy and sell sides. Even though open interest is increasing, there are no indications that the derivatives sector could spark an ADA price collapse.